Okay, very good morning. I hope everyone is well. It is the 27th of March. Just give you a quick update on what we're going to be covering today. We're going to look at what's happened in the markets, which were in the last 24 hours. I was just looking at some charts of the equity kind of heat maps from this week, from last week, and what a difference a couple of days make. The Nasdaq up nearly 4% yesterday. So we'll look at some of the reasons behind that and why it's reversed. We're then going to have a look at the kind of calendar ahead, some other things to contemplate for the session coming up. And then I'll hand you over to Sam, as per usual, who can talk you over the kind of technical look at the day as well. So first of all, as per usual, let's just start off by looking at the charts, and a couple things really stick out. And I am aware cable's on session lows at the moment, so we'll be keeping an eye, and I'll talk about that in a second. But what I really want to talk about first is really the equity market. As you can see here in the center left, the DAX gapping up this morning, getting its head above technically the kind of range that we were trading. You can see that as a technical level here we've managed to just get above. So that was that previous low. You can see it's acted as support a couple times, and we just briefly got above and a test on R1 before seeing a bit of a pullback. And again, as you would normally see, just be a little bit mindful of any gap fill. Now that that's kind of been rejected at that level at R1, it's coming back down toward that Eurex close that we had last night. But obviously European indices following in suit with a firm performance in Asia overnight, and it came after this. This is looking at the S&P 500. So as you can see here, the S&P finished up yesterday 2.72%. And one of the biggest days that we've had in a long while. If you actually look in the context of 2018, it's been a year so far that has seen a pickup certainly in volatility comparative to Q4 of 2017, but the volatility has generally been to the downside when we've had these big flashes of market activity on the sell side, and obviously that was when the market got spooked. This is the beginning of February when we had that increase in wages and heightened risk short term about a speed up in monetary tightening. And then here we are, yesterday's move, really strong about turn. So the headlines this morning obviously talking about US stocks. To put this in a bit of context, it was the biggest one-day gain since 2015. You know, we're not talking about just a small rally here. This was a pretty big jump overall. And when we start looking at the heat map, I think you guys remember me showing you this a couple times last week, and it was just a bloodbath, a sea of red, and now it looks like it's so green that the only real red spots, you've got GE and AbbVie Inc. So I guess on a single stock basis, and some negative individual isolated news flow for those companies, but otherwise check out the tech sector. You know, it's the comeback of the social media names, although Facebook only marginally green. But check that out for a one-day performance. Microsoft, one of the biggest companies on the planet, up 7.5%. Now that's a monster move. And if you actually look at the tech sector overall, obviously this was one of the real key focal points of market weakness last week on the back of that situation about the data privacy that got tied up in the scandal with Facebook and so on and so forth. But a recovery in that, now that story I guess is largely priced in, the sector overall seeing a really nice bounce. And again, this is what it looked like last week. Couldn't be any more different in that respect. Now, again, just to really summarize the reasons for why this has happened, and there's a couple things. One of the main things we were talking about yesterday was the comments in a Fox News interview that occurred on Sunday with the Treasury Secretary Steven Mnuchin, who was talking about what has been undoubtedly the most dominant theme of financial markets in the last week or two, and that is the trade war situation and the escalation that we had seen driven by Trump about this America First policy and the protectionist kind of stance. Now this brought about obviously not just what the US was saying, but the fear of reprisals or retaliation from the likes of China and Europe, these biggest trade partners that you have with America. But obviously Steve Mnuchin at the weekend looked to dispel any concerns by saying, actually, we're very hopeful that we can find a diplomatic solution, and in the end we can avert any type of real large-scale issue in that respect. So, we were talking about this yesterday, and I think that really that's really de-escalated it substantially. The fact that someone who's very closely aligned with the president holds a senior position at the Treasury, and net effect someone who's as I said, closely tied to the president, means that this is a net positive development, i.e. that if you actually think about Trump and what he's doing here, talking to one of the traders this morning, I think actually it's quite a clever tactic, as high-risk strategy as it is, which you'd probably expect nothing else from Trump. If you think about his objectives with the midterms in the US politically coming up at the end of the year in November, by helping keep the people who voted him into the White House on side, by not just talking up what he could do, but by really following it through and heightening this kind of America First policy angle, I think he's definitely kind of solidifying his core base of voters in that respect. Now, whether or not it would ever get to this point, I think most thinking is that it's never going to get to the point of real, true, all-out trade war, because what we discussed before, it's the net effect would be negative for everyone. So it's just really interesting to see that Trump has obviously come out of this with some concessions with global partners. Is likely to be the overall outcome through negotiation on trade talks. A little bit more leverage, you could say, in regards to things like NAFTA with Mexico and Canada, now that he's kind of said and threatened what he could do. And then in addition, he's kind of also just increased his popularity with obviously a specific core of the American population. So it's hard to argue with what he's been trying to achieve here, and he's almost pulled it off at this point. Looking at the trade wars, though, this was an interesting graphic that I wanted to show you. I did share this research report with you this morning, so please do take a read. It's a really nice, concise read by the chaps at ING. But it looks at, and the reason why I like ING's research so much is because they take a research report and basically put it in an infographic. And so here you can see, going from top to bottom, the difference in escalation of a trade war between basically the Trump lone attack, i.e. the US being putting out lots of aggressive signs towards imparting tariffs on other people, but no one really retaliating. Tit for tat, US escalates reciprocal tariffs, and then an all-out trade war, which would obviously be the most market destabilizing in that sense. And if you follow this through, they've got this scenario outline, the economic impact, and most importantly for us as intraday traders, the financial market implication. So you can see here that probably most volatile reaction would come in a full-out global downturn if it was an all-out trade war and US adapts a no-holds-barred policy stance. Now, also within that same research document, I thought this was quite interesting. This is looking at the cumulative percentage change to level of GDP for each respective kind of area after 2 years. So this is taking that previous infographic to the next level of how much it would impact global growth. So scenario 1, obviously this would be no retaliation from other countries. So actually Trump gets a better deal for America in that sense, and you see about a 0.3% increase in GDP to the detriment of China, who, as we've seen so far, have been much more diplomatic. The size of the tariffs that they've been saying is way smaller than what America has been proposing. If you do those start to get in a tit for tat, then America starts turning negative, and obviously the all-out trade war situation would be by far the worst case scenario for global economy perspective. Now, the US would be undoubtedly the worst performer, and this is because US exports would exporters would face high tariffs on all borders, while the rest of the world keeps trading with each other at a prevailing trading arrangements. If you think about it, if the US was to go all-out assault, probably the rest of the world would just continue dealing with each other. Let's forget about the US and find other alternatives, and they would probably be, you'd almost create a unity amongst the Eurozone, China and the rest of the world against the US, which would be the most unfavorable for America in that situation. Me personally, I think this far-right scenario is incredibly unlikely. I do think that Trump, for all his sins, does have a plan here, and I think that at the moment, much like he did with North Korea, you know, you kind of talk a big game, but when does he talk about North Korea now? He doesn't. But what do people think about Trump and his ability to deal with North Korea? They love it because he talks out, and he's very, you know, strong-worded about how he talks about these issues. So, you know, I don't want to sound like some sort of mad Trump supporter, but you know, I think it warrants a discussion. The other thing, of course, talking about the market's renewed positivity, there's obviously been two other things that have happened. This isn't just a de-escalation on the trade front. You've got Brexit, which, you know, we'll get to the pound movement this morning in a second. But don't forget, Brexit transitional deal has been secured, and that you might have caught the headlines yesterday as well, but Kim Jong-un is visiting China. Now, Kim Jong-un has not left North Korea at all since he took over power in 2011. And if you think about it, China's the only one who can really diplomatically resolve the tensions on the Korean Peninsula. Kim Jong-un going to China for an unofficial meeting is definitely a de-escalation of the tensions on that front as well. So all of these different things just helping catapult renewed market sentiment in the short term, and then as a function of market mechanics, don't forget you've got month end, quarter end, and we were talking about this fact that we've been oversold quite recently, and it might have been a good opportunity for equity markets yesterday, which obviously has materialized, and then also from a volume perspective, given that the kids are off school and a lot of people off work, which tends to exacerbate some of the movement from an actual volume perspective as well. Alright, a few other things that I just wanted to mention. For any FTSE traders, this just because it's quite big in terms of a deal size, but Glaxo, UK's biggest drug maker, they're to buy Novartis' stake in the consumer health joint venture for 13 billion rather than bidding for Pfizer's unit. I did also see AkzoNobel seeing some pretty steep movements as well. I think it was Carlyle investing in the company or buying one of their units. So some pretty big pharma related news this morning. The other thing just to mention, and Sam's going to look at this a lot more technically because a bit of the chatter on the floor this morning is about gold, whether or not it's setting itself up for a bit of a push higher. They were all sounding quite bullish until I told them that Goldman's was also bullish, and now they're having second thoughts because Goldman's does have a bit of a knack for calling the opposite for then the market prevailing direction. But Goldman's this morning, having seen the yellow metal hit a 2-month high following their recommendation, they're basically saying that gold is going to outperform in the coming months. And what they're suggesting then is that the commodities team believes there's a dislocation between the gold price and US rates. So if you remember, if interest rates are going higher, typically, which they are in the US, let's not forget they're going to execute 2 more rate hikes to the one they've just done last week. Gold typically would move lower in a inverse relationship to the yield, which would normally come with a stronger dollar. The only thing is with this trade war situation, the dollar's weakening and continuing to do so amid also kind of structural weakness on an increasing fiscal deficit in the US. So Goldman's feeling pretty bullish with gold at the moment. Alright, quick look at the calendar for today, and then I'll hand you over to Sam. And in terms of, although this calendar looks quite busy, I would say it's fairly clear of anything major that you'd need to be aware of, certainly from an economic data point of view. 10 o'clock this morning, You got a couple of sentiment readings, the business climate coming out of the Eurozone, but very rarely does this really impact the market. You've then got the API oil inventories, but they don't come until much later. A couple of speakers to be aware of. ECB's Liikanen coming up shortly. And then Bostic of the Fed speaking at economic conference this afternoon. Just finally, before I hand you over to Sam, I did say I'd quickly mention it, but the pound just seeing a little bit of movement over the last 45 minutes or so. You've seen it come under a bit of pressure. It's broken the kind of range low that we were trading from overnight in the Asia Pac session. We briefly tested that first thing this morning when Europe came in. Now it looks pretty aggressive here, and we have just gone through that subsequent low, or we're testing it here. That was from yesterday afternoon before we rallied. But let me just flip over to, this is at the sake of sounding a little bit Blue Peter, here's one I made earlier. And this is putting into context last week's move in the pound. So this was obviously the Monday last week when the transitional deal was secured, the positive UK wage data, the dovish FOMC dollar weakness, so cable moving higher. This was the Bank of England flash activity on the 7-2 split, and then the agreement in Brussels that we had at the end of last week. So if you start looking at cable on a slightly longer time frame, you know, you have got to put this in a bit of perspective. I don't think there's anything more behind this than purely maybe a little bit of profit taking. If we start coming lower, be interested to look at this level in the futures here at 142.29, that previous cap just before the announcement of the Bank of England rate decision. You've also got that subsequent high that was seen after the wage data. So that kind of zone, I guess, there would be quite interesting. I'd be interested to hear what Sam has to say about this. But maybe around here could be an interesting point of support. And obviously going lower, scaling down, there are other interesting areas. That 141.46 would be a bigger, probably more stronger level lower down. Whether we'd get there on the intraday, probably not. It's quite a fair distance to get to that point. But again, I'll leave Sam to pass on his thoughts on the technicals. All right, that's it from me. As you can see then, the DAX, now that the market's got over a little bit of that euphoric response to the market movement on the close last night on Wall Street and Asia, I don't think it's any surprise to see the DAX looking for a gap fill here at the moment as well. Okay, thanks guys.
Yeah, definitely worth keeping an eye on that DAX over the next few minutes. We'll come back to that in due course. Just going to have a quick look over the pound here, which, as Ant mentioned, is a half decent area now of interest. You can see where we did have a bit of a pullback yesterday to 41, or 42, 41, just testing that area now. So we'd expect a bit of support there. For those perhaps looking for a safer point of entry, I'll just put one into trading now. So do have a look at that. You can see how we've broken through around here. Well, yesterday we sort of found a bit of support on there. So around this point in the market, if we were to come back down, a bit safer to look for an entry around there. The double top that we sort of broke through yesterday as well, just rectangle that up there, just above today's S1, I would expect a decent level of support here as well. But it is a sharp move to the downside. You know, the sentiment perhaps might be, you know, favoured to look for a retracement to the pivot to look to continue the daily trend. But I would expect some decent support levels around these S1s and a break of that trend line that we saw yesterday afternoon, and then finding a bit of support on there as well. Euro, obviously with well, before we go to the euro, with pound coming to its lows, you can see euro pound here pushing quite strongly through the R1 level in terms of sort of resistance areas to the upside. If it hasn't already found some, you have R2 there, but just a bit before, I guess you've got that's a test really, the sort of the resistance of the sort of late morning on the 20th there, sort of capping the upside for now. One to keep an eye on it. I mean, above that, the high of the 20th, which was pretty much the low of the 19th morning, I would expect a decent resistance point around there. Also breaking through this morning for euro pound, quite an interesting resistance point from yesterday where you can see we had quite a good price action on previous trading days. So for any sort of pound related currencies pairs, I would definitely have a look at that. We just got the FTSE here as well. I'll come back to the euro in a minute. FTSE just finding resistance around 7,000, around the R1, around previous lows that we broke through on the 22nd. So again, keep an eye on this. If the pound was to continue to push lower, you may get the FTSE pushing higher. But as mentioned, the pound is coming to a bit of support from yesterday as we speak. Having a look here now at the euro. We broke through quite an interesting sort of level of sort of resistance that we had been in yesterday, and we continue to push higher. You've got a break of this trend line as well. Just trying, well, first sort of test of the high of the 7th here for euro, and I'd just lower the time frame down. It could well be that it gets a bit messy, as you can see sort of around there before, maybe looking at a push higher. Trend line broken this morning from yesterday's highs. You can see it was quite well respected once, twice, 3, 4, and then before breaking. So I'd be looking for a bit of support around here if we do come back down. Safer option using the lows of the day as a potential point of support as well. We'll be keeping an eye obviously on how the dollar is reacting later on in the day, but you also got a breakthrough there. Then I would also suggest the pivot as a good area of support. Preferring the moves to continue to the upside. Would look at these trends from the bottom just to see if they sort of line up with anything of interest. Doesn't really look like that's the case for now for the euro, but would be keeping an eye on that previous high that we made. If we can push on, then it's a sort of open the door, and next thing you know, if we put this back onto a sort of daily continuation, it's going to remove all the pivots and everything. It could well be not too long until people start seeing the highs of the year again. So definitely one to keep an eye on for the euro going forward there. Have a quick look over the other currency pairs. Starting with Aussie dollar. Let me just put the pivots on here just to give it a bit more clarity. You can see sort of ranging choppy. As sort of said yesterday morning, it wasn't going to be a day where there's going to be a clear sort of trade all the way through all these sort of support and resistance levels. I think today R1 looks like a good level for sort of a range bound short. In fact, I quite like the look of that. I think that's good. R2's again marked up quite nicely with a market level, so these points of interest for the short later on look quite good. But it has to be said that over the last, well, if you conclude today, 3 trading days, we are sort of ranging higher. So S1 and yesterday's low yesterday afternoon's low doesn't look too bad as sort of a range bound trade. I think thoughts should probably be elsewhere, right? With the Aussie dollar just sort of finding its bearings now for the last sort of couple weeks of trading and going into month end. Lower volume perhaps for this currency pair. I'm not expecting too much. Dollar yen, you can see this morning just pushing above that R1, finding resistance not far off the sort of afternoon high on the 22nd. First sort of test of that, holding quite well. In terms of levels, if we were to come back down to find support, it's going to lower the time frame here to a 15-minute, the low of the day, not too far off now. Sort of broke out this little range that you can see here. Safer option, the highs that we broke through yesterday, so you can see how good this sort of level has been. Once for the support, we broke through, then to find resistance once, twice before breaking through last night. So I'll be looking at this area as a potential point of support if we were to get down there later on. Obviously, main stories yesterday. Yesterday evening was all about this bounce in equities. The 200-day moving average for S&P working wonders again. In terms of resistance points to the upside before we look at support, obviously the next sort of level above where we found resistance now at 78 and a quarter would be the R1 before any of these sort of highs here. You've got to see there's been a fair few pullbacks last week that have offered quite good resistance, so I'd be aware of all of those. The key level for me this week, if we were to get there, would really be where the breakdown started, so 27.12 and a half there. Can we get that today? I would say probably unlikely, but again, worth keeping an eye on there. Levels of support, points of interest, what could be for an entry, or if you're looking for the overall sort of trend of this market recently to continue, so maybe you're looking for these levels to break. I'd have this trend line on here. You can see we broke to the upside yesterday, and of course any sort of areas of support. And you can see it get quite choppy around here. If we lower the time frame down 15 minute, you can see if we do push down, I'd expect a bit of support on all these areas really. Probably a case of sort of waiting into the afternoon. You can see that's really what happened yesterday. We sort of grind higher, cash open came and moved lower before getting that push later on, and it's going to look quite similar for the Dow Jones as well, finding resistances before the R1, and Nasdaq as well just before that R1 on quite a good level there. You can see the pullback again on the 22nd, similar to the S&P. It's actually quite an interesting point here for the Nasdaq. I'll keep an eye on that going forward, which was really leading the way in the morning yesterday. R1 holding a support for, as we mentioned, that cash open push down, and then you can see the push on through there as well. Gold, I'm just going to start gold off with a daily chart. Obviously I see Michael putting in a couple of charts this morning, and it does look quite half interesting at the moment. Here you've got gold trying to sort of push. I would definitely have this trend line on going through the previous sort of highs that we've had. I'm just going to roughly draw that there. You can see we've had a couple of tests, no close above though, which would be the key sort of thing. But you can see how many times we've come up to this sort of area in general for gold and come back down. But it does feel, you know, without sort of trying to wish it to go higher, that now could be the time. In terms of levels for gold today, support and resistance points, the pivot has held quite well. We're keeping an eye on sort of that, this high and yesterday's high as well. Probably get a trend line on that break that we had yesterday, so if we did come back down later on, we'd perhaps expect some support around here. And it also marks up quite nicely perhaps later on with 1353. Worth keeping an eye on there for gold as well, and then any sort of trend lines that we could get going from around here. Okay, that might be a bit sooner than the others. Keep an eye, obviously pivot looks quite good, and if we can get another test of the high as well, would be half interesting. Let's have a quick look at oil before we have a look and see what the DAX has been up to in the meantime. Just going to refresh the chart here. Oil, which again, if we put this on a bit of a longer time frame, you can see has been gradually, you know, grinding higher. Every time we sort of come down, it's, you know, quite resilient to try and push on through, and we did briefly get above the high of the 25th yesterday, so keep an eye on that 26th, yeah, through there. Resistance at the high of the day, but you can see really until, I mean, maybe even yesterday's low, it's sort of stuck within that range. My advice for now, I mean, maybe 65.49 could be a half interesting level, but probably waiting for a break out of that for the cleanest trade. Let's have a quick look and see if we can get a trend on, yeah, 65.49. Sort of matches up quite nicely. Here you've got the test, there you got the second, there you got the third yesterday. So keep an eye on that. Would I enter on it? Probably rather see a break of it, I think, to be honest, just considering at 65.49 what you can see happen yesterday, just how messy it really was, no real direction. But it's a trend line, it's level of support or level of interest for this market going forward. Quick look over, actually the dollar CAD actually just catching my eye before we have a look at the DAX, just trying to push to its sort of highest levels for a while. So again, keep an eye on that. I think the pivot I was looking earlier looks quite interesting as a potential area to short that market. The DAX hadn't quite had a go, but still, you know, not far away, and you know the DAX can easily feel that quite quickly. So eyes still on that. Have a quick look over cable. Last one to wrap it up. Continuing to push through. Just have a look. Did it get to that sort of trend line? Sentiment's definitely down, you have to say, at the moment. There you go. Sort of testing that now. So keep an eye on this level for cable. Bit lower if you are wanting that safer 142.23. The previous highs from yesterday and Friday that we did break through with S1. I would expect a bit of support around here, but this move is gathering a bit of pace here as well. And keep an eye on FTSE if we were to continue lower. Any questions, please do get them in the chat, and I'll be posting throughout the day as well. But have a good trading day, and I'll catch you later.